Today's date, 11/3/2012, election weekend. What are we going to look at here is a weekly Apple chart. And what we will be doing with our MMTs is that we will be looking at the 570 call contract that is at its all-time lows in here. It's never been this low. They were as high as $137. They're wholesale down in here. That's that particular contract. There's another one that we'll be looking at with our MMTs, and that's going to be the 580 call. And all of these are the monthly contracts. They expire 11/17. And one of the things that I'll point out clearly is that we will be taking a look when Apple will bounce again. Remember when the calls were up here? These were all inflated. This is the lowest that this contract has ever been. And no one ever thought that that would ever happen, the 580 call, which means that these are totally deflated in the price, MMTs. And what we will be looking at moving forward is how to get that drop down bid. But most importantly is that we have this weekly Apple chart that has come right here. This is the weekly breakout. So let's be clear about where this breakout was, MMT. Look at down here. That was that when we had that first correction that was selling us short up here. They pull it back and then they made the highs. We're right back here where the weekly resistance levels consolidated and you started building it and you shook it out. But it started here, it held the support level, and kabing. Now, unfortunately, mathematically, Apple's bull trend is gone. And what do I mean by that? There's a difference between a bull and a bear. We are, as of right now, 1 week, 2 weeks, 3 weeks, 4 weeks closing below this blue line, referred to as a 10-week simple moving average. And in our platform, bull and bear trends change when you start closing below the weekly moving averages like that, and the 10-week is pointing down, and you're below the 20-week, and you're right back here at the most critical support level of the calendar year. You always want to see the higher support level. Another trend line that I will be happy to show the MMT is that one of the things we'll be looking at is where this pink line is. And we'll be looking at these weekly half bars right here. And this particular bar right here, MMT, it's going to be this one right here. I'll just draw a little X right in here. Okay? Because what's going to happen is if we come down and test the 50-week moving average, that price level is at 556.84. Now, let us not forget that Apple closed at 576.80. The low, 574.75 on Friday. The range, $22.20 MMTs. Volume, 21 million shares. Hurricane and everything else involved. This thing is at a critical level of support. What do we want to see is how on the weekly here that we haven't gone into a weekly sell signal. This weekly MACD, which is a standard technical analysis indicator, we don't make decisions with it, but high frequency does. One of the things that we would like to show here is that is going to, if we break this weekly support level, we could sell down one more time to this level. That would be the 50-week moving average. One of the things that we would like to also point out that when we get a bounce from a daily level, meaning that on a daily level the stock is oversold in the short term, MMT. So our major resistance level will still be this half weekly bar right here, MMT. Okay, I'm going to delete that. That's this half weekly bar right here. Right here. That's where we burned that top to that reversal. But that's going to be the resistance level, MMT. $602. It's got a ways to trade back up there. That's the first resistance level of the low end of that weekly bar. If we get to cooking and we get the fall rally going, well, we can come right up here, and that's going to be 620. That's below that 20-week moving average. Let me just caution people though, one of the things that we'll be watching in this name is how far this 10-week simple moving average declines in value. When you are back in a bear trend, which trades different than a bull trend is a total different trade than a bear. Yes, the long-term trend is an extreme bullish trend, but in the very short term, in a weekly level, short term, we have reached a point where the stock is not in a bull trend. Because when the stock is in a bull trend, you're traveling above the 10-week moving average like this, and you're 4 weeks above it, 1, 2, 3, 4, and it just kept going higher. We did undercut it over here when we had that last shakeout. It was 1 week, 2 weeks, 3 weeks, but on the fourth week over here, we got back above the 10-week, and that was a total bull trend. Now, relative to the support levels and resistance levels, the resistance levels will remain up here at the half weekly bar. That's the upper end resistance 2. Resistance 1 in the shorter term of trading this position is going to be the following right here, MMT. It's going to be this weekly half bar. And I'm going to draw a trend tool right through here. We'll look in our system because our system will tell us. But nonetheless, it's going to be right there. And let's take a look at that number. There it is. So in the short term, 570 is where this major support level was. We could trade down here from 576.80 depending on what happens on Monday. They sold $744 million of the name. That's how much people were selling. That's the money flow. So, what I will tell the MMT is that this half bar, this previous last week right here, is going to be somewhere right around here. So, when we're trading up off the bottom, the first area of resistance of this half bar is going to be 585. And if you go back over here to the weekly support level of that weekly bar before that rally started, that's going to be the low end of this weekly bar, which is equates mathematically about almost half. It's close enough. We'll get the other numbers out of our MMT platform. But if we come down to support, then we trade up to these resistance levels. So if we hit support here, that's resistance 1. If we fade back and we break out, then we're going to go up to another resistance level. And the next one is going to be roughly right about here. Let me draw a trend line right across here. It's going to be right here, MMT. It'll be the higher end of that bar. So there's the trend line right about here. And that's exactly at the low end of this wick, the previous week's wick. Oh, yeah, it is. And if you go over here, you can see it was the low end of this weekly support level right there. So that's going to be resistance 1. If we come up and we pull back and we break through this half bar, this will be resistance number 2. Yes, it will. Now, if we pull back again during the fall, the next resistance level, we would pull back on an intraday level. The next one that we'll be looking at in the upper end of this is going to be roughly right about here. Let me get it just right. This is going to be it. Right there. And that's going to be 597, right below the 600, a few dollars below the 600 level now. That's going to be number 3. And number 1, support level, we're right here at the current level, which is part of this wick, but this wick down here on a weekly level is 570.40. So if we sell down, that's going to be critical support 1 on the lower end of the channel. There can and will be possibly when we blow this up and we start getting back right into here, if we were to break any of these levels, then we're going to have other levels of support. And I will show you what they're going to be. And I'll tell you now, you got to get back over to here. Here is the lower levels that really could get shaken down to. And I'm going to show that to you. That's going to be this lower weekly bar, MMT. That's 561 right here. If we break any of these levels of support that we're talking about right here. at the 570 handle. That's going to be the next major support level right down here and within it. And so it's very important to understand where these levels of support will be and where these bounces will be. Now, having said that, the daily chart on Apple MMT has fallen through the 200-day simple moving average. Now, let me tell you something mathematically on a very short macro term. Why would Apple bounce stronger? Meaning that when it does hit those lower support levels that I've talked about, I'm going to draw this trend line right here. Then I'm going to go over here and draw this one right here on this daily area. And what I'm going to tell you, MMT, that 200-day simple moving average, it went below it and it triggered a lot of stop market orders and it came back down in this daily support level right here. This is what it looks like on a daily. But let me tell you in the short term mathematically, it hasn't been this deeply oversold in many months. And I can prove it. You don't think so? Let me draw a trend line here, MMT. And these are the reasons why the lower support levels will bounce. You're minus 18.7. That's a minus 18 flag. It's never been minus 18 before. That means that this daily chart, it's never been this. Look at the only time that it ever got down here to this deeply oversold is back in the financial crisis, because it did right here. And we're right down here at the bottom of these levels where these frickin' turns. See, the thing about it is, MMT, this one is very, very deep in its nature. Let me show you if I can. Right here. You can see these peaks here. And you can see these previous peaks over in 2008 here. And you can also see in 2012, at times when it got deeply oversold, you bounce big. I'm telling people now, we're oversold. We are deeply oversold on a shorter macro term. This deeply oversold condition on a daily level represents how bottoms will be put in and how high frequency algorithmic programs would run Apple back up to those resistance levels. And I will tell my MMTs that at this particular level right here is that any drop down to lower support levels in Apple at those support levels that I showed on the weekly chart is where we're going to bounce. But let me tell you that the 200-day simple moving average, the green line, from a daily perspective now, that's going to be the wall of resistance off of these lows. Okay? And if I draw a trend line over here, any move down, MMT, here's 567. That's slightly a few dollars below that 570 support level. So if we come down and hit the weekly 570 support level, you can always kind of undercut it intraday. But when did they bounce off a support level? Because all of the sellers are out of the name. I mean, the on balance volume right now, just to give you an idea, I can tell you what the on balance volume is, MMT. I would be happy to do so. And I can tell you that the current level that we have and that we will look at is where the on balance volume has all of the selling in the short term is about out of the name. Because when we take a look at where the current date is, the 10-day negative on balance volume in our system is negative 115 million shares. The 20-day on balance negative volume is minus 166,747,811. That means that we will know that the most of the sellers are going to be out and that the shorts are going to be on top and are on top of the name. Short sellers are heavily weighted because of the negative on balance volume, I can tell you. However, we are going to trade this thing off of these support levels. That 200-day moving average is at 590. So if we come down to 570 and trade back up there, that's a $20 move off the bottom. They can do that real easy. He's done it many times, more than I can count. It had $22.20 down. Math works both ways. That's going to be the resistance level, and these are going to be the support levels. Now, what we'll be doing is off the video, because we're deeply oversold and all the premium has been worked off and people have been mutilated in the call side of this. Remember, this call was $100 in the money, and Apple's dropped, and all the premium is down at rock bottom levels. Off of the video, for the next week's trade, depending on what the election does, these calls have a potential. When they drop down and hit their lower price levels, they're going to bounce. And they're going to bounce because the equity is short-term oversold. So the best time to be in these calls, and that's a 570 call, okay, is to get them at the most wholesale price level where all the premium and everyone that own them has been taken down to these levels. And this is a call chart, okay? So basically, we've done our analysis on the weekly chart here, MMTs, and we're going for the calls that have been shaken down, and we're going to look for profit objectives in these trades depending on the volume of contracts that we get. We have 30 contracts. We're looking for roughly, in the first pass on that trade would be $3 on the call side. Short term, we would sell it for $9,000 profit objective. Then we would get another entry based on the equity now. And based on this weekly working, and we haven't got a weekly sell signal. We've worked where we were totally overbought. We're no longer overbought. In fact, we're only at 30.36 on that percent DS that the high frequency machines will use. Once again, I'm featuring a 570 call. These are the various different weekly contracts. 11.9 is a weekly, 11.17 is a monthly, and we're starting them at 565 calls in both different weekly and monthly strike prices. We will set the alarms. We are going to rock this thing, because I will tell you, if the bull is going to return from the markets being oversold, and the markets took a bloodbath on Friday, you can see where the Dow and all of these things were. And it's the beginning of the calendar month with the election. Nonetheless, I can tell you right now that Apple Computer has got lower support levels, and on a short macro time frame, every time that thing gets down to these next levels of support, we're bouncing like a rocket. And I'll tell you why. Because eventually the high frequency trading algorithmic programs are not going to be able to read down. They have to read up. And that's a different subject. MMTs, the MMTs that are here, they know what I'm talking about in high frequency now. And where does high frequency work in your behalf? This is a major sell through of the 200-day simple moving average, and electronic stop market orders were taken out all the way down to these support levels. Apple has a great opportunity when it gets this deeply oversold. It hasn't been this deeply oversold, and I've already shown that for years. Back over here when we had a correction, it got oversold, but not as deeply oversold. This was oversold to a degree right here, but not nearly as deep as this one is. So as the price volatility plays its role, when this name gets back above its 200-day simple moving average, that is when the broader market of the bull trend, it will take this name to perform in order for that NASDAQ 100 call to really work big. And not only that, the name will not be left behind. Back to these support levels and the setup levels is that with the election, Apple is deeply, mathematically, in a very short time series, it's oversold. And you can stay in an oversold environment. You can stay in an oversold environment. One of the things that we'll make clear is that no matter what happens, we've reached a level where Apple will bounce. It may not bounce as hard as it did back in its original bull, but remember, bear bottoms, we trade bear bottoms, and that's what this is it's a bear reversal. And bear bottoms have a way of trade management. And when they get that deeply oversold, I'll just leave it there that we're going to make some money on Apple Computer.